Hello guys, welcome to today's video. So today we are going to be looking at change in state of delivery. What is change in state of delivery? It's I won't say pattern, but it's a candle formation you need to see. So it just simply means you want to see price disrespecting one state of delivery to the and respecting the other one. For example, you want to see price change its state of delivery from being bullish to then being bearish. So if I go on the charts, for example, let me just point out some areas of where we can identify it. It's just like an advanced way of spotting an order block. That is just all what the change instead of delivery is. So, for example, we can have it at this level. You see, this is a series of down close candles. You want to see price close above this series of down close candles. So, what has price done? Price has changed its state of delivery from being bearish to bullish. So, that is what change in state of delivery is all about. And I'm going to show you guys how you can use this to trade. Okay. So let's look for the change instead of delivery, a bearish change instead of delivery. It's very simple. So for example, we have this level here. So if you look at this, if you look at this, you can clearly see this is a series of up close candles. So a close below it, that is change instead of delivery. It could be a single candle, it could be a series of candles. When it's a series of candles, it turns to hold. So you can wait for a close after, price could retest, and you get an entry. So it's actually like a very advanced way of, a very advanced entry model. So now that you know what it is, same as all of these POIs, these fair value gaps, order blocks, not every single one of them is supposed to work. Okay, you can't just go using every fair value gap you see on the chart expecting it to work. So how you use it is you have to follow the higher time frame bias, and you come to a lower time frame such as like the 5 minute, the 15, you can get an entry. At the end of this video, I'm going to be breaking down these trades, okay? And I'll show you how you can use this to the very full of your knowledge. For example, let's say you get into a trade, and or let's say you were not able to take the first entry, and the second entry could pop up, but you don't know how. But I'll be showing you how you can easily spot that second entry using change instead of delivery. So first let's break down this. So if I can just be able to cut price now, let's see. So if I can just cut price at this point, okay, I'll be showing you guys how I missed this entry, but I was able to get into this entry. Okay, using the change instead of delivery. So this is Nasdaq, Nas. Uh, so first, what I was looking at, I went on the 1 hour time frame, and I was able to spot out some few points of interest and the direction of the market. So yesterday we had CPI. If you guys watched the my video, I put the video I just posted on how to trade news. You will find that it was difficult for you to get an entry for the CPI because it didn't follow the first rule we need to see. So we need an expansion candle that the high or the low could be taken out later on, not immediately. So the high for the CPI 1 minute candle was taken out immediately. So there was not entry for us. So now on it's just going to be a breakdown, okay? So looking at this now, you can clearly see how from the early time frame after CPI call, then we had the 9:30 market open. I wanted to see if this candle, this 1 hour candle close below this area, so to give us our change instead of delivery. I hope you can see that. I want to see a change instead of delivery in this level. So you see a series of up close candles, then we have a candle closing below the body of the very first candle. And you can even consider this as a sweep of liquidity. So that can be considered as a sweep of liquidity to then go lower. So once the sweep occurred and there was SMT with these highs, the sweep occurred and we had a close below this level. So at this point, I'm going now. So you have to wait for this 1 hour time frame to close. I was wanting this to close, but it didn't. It went back up bullish. So this one had this one. I waited for this 1 hour to close. Then once it closed, the correlated or the aligned time frame for the 1 hour is the 5 minute. So I went down to the 5 minute to see if I can get some entries after we had that 1 minute, that 1 hour close above. So at this point, now looking at what I have, we can clearly see we have a 5 minute change instead of delivery at this level. And this was very clear sell side target for me. So the 1 hour that we was waiting for actually closed in this area. So all what I was looking at, I was like, okay, if we are going to continue going bullish, going bearish, sorry, I want to see price, give me some sort of entry using a change instead of delivery. This level you see here is the low of a bullish fair value gap on the daily time frame. So I was using it as a draw on liquidity if we continue going down because there was literally no liquidity point below this one. So I'm just going to show you guys how I did enter this. How I the thing is I didn't miss this trade because I was on my chart waiting for this to play out. So my broker just couldn't let me place a trade at that time. I don't know. It went down. So looking at this, so now there was SMT in this level, but this was for this entry. So currently for this, I was like, okay, if I want to see a change instead of delivery. So price was just momentarily going bullish. This is the 5 minute. So I want to see price close below this bullish candle. So that will give me my change instead of delivery right there. So once we had the close, simple. I enter off the close. You could enter off the close or the retest, but most of the time when I enter off the close and my stop loss is reasonable, because I always put my stops on the closest swing high. So my stops are that high, then I always try to get minimum 1 to 2, minimum 1 to 2 weeks to reward. But since we had this low here, I was like just expecting to get off the trade based off the reaction I see on the candles. So I think this trade would have been a very good about 1 to 3, very good 1 to 3 weeks to reward. But I didn't enter from there. I enter from here. I enter at this point. So if you look at this, since we already had the entry, but my broker didn't let me get into this trade from this point. I'm going to be showing you guys how I went to I went to a 1 minute. I went to the 1 minute time frame, but I went to the 1 minute time frame using this. If you see, we have a bearish fair value gap at this point. Okay, now I want to see how this bearish fair value gap is going to work. Let me delete all of this so I can explain this better to you guys. Let me just shift this. Sorry. So I want to see how this bearish fair value gap is going to be respected. I will not enter this trade just because we tapped into this bearish fair value gap. No, because at this point, price could just reverse at any time, and this gap could just be like liquidity for the buyers, and they just grab everything and keep going higher. So I just want to be very safe and sure. So once price got into this fair value gap, I went to the 1 minute time frame, and guess what I'm looking for? The 1 minute time frame change in state of delivery. So if I'm right, I want to see price disrespect the current bullish price action and respect the bearish one. So if you can look right here, you see that we had it. So this is a series of up close candles. Now we have a close below this. That is my entry. Okay, you have a close below this. So since this close was massive, and we had this and we created this fair value gap. So regardless of this fair value gap, since just the fact that we had the close was a little bit massive for me, I prefer to risk me waiting for the trade to retest this level, because most of the times I've seen scenarios where we have this massive close and price tends to retest the level, which now turns to an order block. So it's like an advanced way of spotting an order block. So it now turns to an order block. So all what you have to do, very simple. You wait for the close. If it's a decent one with, if it gives you a decent stop loss, like decent peeps in stop loss, because I'm really looking for good risks to reward. Because I wasn't really expecting price to come all the way here, but I just wanted the price to come to at least a certain decent risk to reward. But looking at this, it wouldn't even give me two risk to 2 hour. So I waited for the close to the for the retest, sorry. So once price did the retest, which is now an order block, and again inside this level, we have a bearish fair value gap. So in my mind, I'm saying if we are bearish, this bearish fair value gap has to hold. So it didn't end up holding at this point. It went higher, but guess what? We still have all of this area as our order block. So now my stop loss was just placed at this high, as you can see. And you can get it minimum 2 risk to reward. Let's just say that's the first target. So you can see how the trade played out beautifully. So it probably tapped into some sort of, since all of this range you see here, this is a daily fair value gap, a daily bullish fair value gap. So the reversal could start coming at any time. That is why you see once the reversal started coming in, price was just price just turned bullish the rest of the day after the 10 a.m. reversal. Price just turned bullish the rest of the day. That is how you can use the change instead of delivery to your advantage. Like let's say for example, you was probably waiting for a buy to occur, and I want you guys before using the change instead of delivery as an entry, make sure you're working from a higher time frame perspective. Like the higher time frame is bullish. The higher time frame is telling you to be bullish. Then you can see all of this bearish PDRAs on any time frame, you can expect them to be disrespected because this is a bearish family gap here. This is all of this area we have bearish order blocks. As you can see, price is currently disrespecting them. So you see right here, what do we have here? Series of down close candles. And what does price do? You have a massive close above it. It didn't come to retest the level, but it left behind a breakaway gap. That's a fair value gap that wasn't, tapped into before the expansion, and price just kept going higher. So let's say you missed all of this, and just because the day we are reacting off of a daily fair value gap, you don't expect price to respect this bearish change instead of delivery. Because look at this. This is what, and this is how I got into this entry right here. I wasn't expecting price to respect this, but you see, we had a close below this down close. Yes, it's a 1 minute. So it's just like a liquidity for this for the buyers because why are you selling if we are tapping off of a daily fair value gap, daily bullish fair value gap? So at this point, we had a close below. That is a change instead of delivery, yes. But will it hold? No, because we are writing off of a bullish fair value gap. So at this point, I was like, okay, I want to say this fail. I want to say this bearish setup fail. Then I'll be getting into the buys. So as you can see, we had this was what I was expecting. This is a series of down close candles. I want to see price close above. So this was a candle close. So I got in immediately as the candle closed. Actually, my stops were below here because I was saying, okay, we could come and retest this fair value gap. We could come and retest this bullish fair value gap, but price never came to this fair value gap. It ended up being a breakaway gap. So as you can see, if I play price, once we had the entry price, I think price took some time around that level, but we later on saw expansion to the upside. So and the rest of the day, that was price was bullish. Okay. So this is how you can use the change instead of delivery to your advantage. You just have to know the context of the higher time frame. You can't be looking for entries on the lower time frame. You can't be looking for bearish entries on the lower time frame if the higher time frame is telling you bullishness. Same as for the bearish scenarios. So you just have to make sure everything is in context, okay? Because like I told you that if I go on the daily, let me show you. This line I marked here is from the daily. Sorry, it wasn't from the daily. It was from the 4 hours. Sorry. But again, you can see there's a daily fair value gap there. So you see, this was a daily fair value gap. You see that? So that is why you see price was reacting so crazy. So there wasn't really any points where we could actually spot the reversal coming in, but the reversal just started. So the whole point of this video is for you to be able to understand change in state of delivery and how to use it to get entries and how to use it to even get the bias of the day. So you can go to a higher time frame. Let's say on the 1 hour. The moment you start seeing price, changing instead of delivery to from bullish to bearish, okay, we're going to be bearish that day. Like for example, look at this. This is going into today, into yesterday. Sorry. So we on the 1 hour we had price tapped into this sort of order block. Price tapped into this sort of order block. Once price tapped into that order block, you can see immediately it went and gave us a change instead of delivery. So you see the bullish close above, and the rest of it was history. It just pulled back in here on Wednesday to retest some certain levels. And again, still on this 1 minute, we do have sorry, still on this 1 hour, we have another change instead of delivery occurring. So that is how you can use this change instead of it's a very, very powerful weapon if you know how to use it, and make sure you're using it on the right context of the time frame. So if your daily, your higher time frame is telling you is giving you bullish change instead of delivery, you have to know, okay, when you go on the lower time frame, you want to wait for some sort of liquidity sweep or price tap into some bullish PDRA so you can continue higher. Because your higher time frame is telling you need to go higher. So that is what I have for you guys today. And please make sure you back test this. It works very, very well. Back test it and see you on the next.